Did you see that the Indian benchmark indices Sensex and Nifty hit new all-time highs? Indian equity benchmarks extended their bull run for the fifth consecutive day, with Nifty hitting about 24,000 and Sensex at a record high of 79,000. Now what's more, the Nifty has now reached a record high for the 25th time just this year. 2024 has been a strong one for the Indian markets, giving about 11% returns already, even amidst all the challenges we faced. Now, according to Bloomberg data, India saw a remarkable 13.8% rise in dollar terms during the June quarter. Now, this surge is the highest among the top 10 markets worldwide. Now let's focus on this week and talk about the several factors contributing to this impressive rally in the stock market. A major driver of the market surge was the performance of Reliance Industries Limited. Now shares of this oil to telecom giant hit a record high, with its market value surpassing 21 lakh crore rupees. Now if this milestone was reached due to a more than 20% surge in its stock price this year, making Reliance the first Indian company to achieve this valuation. Now, a key factor behind this week's growth was Reliance Jio's tariff hike, a long-awaited move in the telecom sector. Now, following Reliance Jio, even Airtel increased its tariffs. While we'll explore the tariff hike's impact in detail later, it's notable that Reliance stock surge, holding a hefty weight in Nifty, significantly contributed to the market's all-time high. Now, solid gains in the shares of the banking heavyweights were also another factor. Yesterday, Nifty Bank hit a record high. Now, the inclusion of Indian bonds in JP Morgan's emerging market index also played a crucial role. Now, although this recognition for India might seem overdue, it finally places Indian bonds on the global stage, which is a very big development that has also added to the positive sentiment. Now, India's current account also saw a surplus of $5.7 billion in the March quarter, which is a big improvement from the $8.7 billion deficit in the previous quarter. Now, the main reasons are higher exports of services and a smaller trade deficit. While there are mixed details in the current account data, this shift also added to the positive outlook. Now, additional positive factors including a good monsoon season, a strong economic prospects, and expected policy stability with the new government following the elections were also some of the factors that contributed to this rally. Now, the Indian stock market looks promising in the medium due to a positive economic outlook, and here's what you need to expect as an investor. Now, with the election season over, this clear policy continuity, this political stability boosts investor confidence. Historically, such periods in India lead to better policies and economic reforms benefiting the markets. The Union Budget in July is also the next big event. It will outline economic policies and reforms for the year. Investors will look for signals on fiscal discipline, infrastructure spending, and growth-boosting reforms. This budget might also introduce measures to stimulate the economy, drive investment, and also support key sectors. Now, there are also expectations of rate cuts by the end of the year, and lower interest rates can make borrowing cheaper, encourage spending, and attract investments. Now, this likely monetary policy easing can add liquidity to the market, supporting further gains. Having said that, this is me, Malzana, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.